Today, Wednesday the 19th of August, 2026, a single piece of unfinished American legislation is moving real listed companies. Coinbase, Circle, and the crypto exchange group Bullish all jumped during the session after fresh optimism around the Clarity Act. This is not just a social media story. Prediction market odds around the bill have spiked as high as 90% according to social posts circulating this morning, while the bill itself has still not actually passed. That gap between high odds and no final law is exactly why today matters. Markets are not waiting for a signature. They are repricing the risk now. The key question is whether that repricing is too fast, too slow, or simply catching up to a much clearer rulebook for digital assets. So what is this bill? The Clarity Act is proposed U.S. legislation designed to define which digital assets fall under the Securities and Exchange Commission and which fall under the Commodity Futures Trading Commission. In plain English, it tries to answer the single biggest question in crypto: is a token a security or a commodity? That answer determines who can issue it, who can trade it, and which exchanges can list it. The bill is widely seen as broadly bullish for crypto because it gives altcoins a route out of regulatory limbo. It is only narrowly bullish for Bitcoin, because Bitcoin is already treated differently by many regulators. SEC Chair Paul Atkins has called himself optimistic that Congress will pass the Clarity Act, and that comment is one of the main pieces of fuel behind today's move. The catalyst today is a mix of Washington signals and market chatter. Paul Atkins is reportedly set to unveil major crypto rules, and his optimism about the Clarity Act has put regulatory clarity back on the agenda. Treasury Secretary Bessent has also made comments that investors read as supportive, with stocks like Coinbase, Robinhood, and Circle seeing gains. One widely shared social post said passage odds spiked to 90% after bullish remarks from a Coinbase executive, while Ohio Senator Bernie Moreno suggested Congress could move the bill forward in the coming months. Again, no final vote has happened today. What has changed is the tone. Investors are treating the bill as a matter of when, not if. That shift in probability is what pushes share prices before any law is signed. The visible impact is already in share prices. Coinbase jumped because clearer rules would reduce the legal risk around the dozens of tokens it lists and could open the door to more assets. Circle moved because its USDC stablecoin is only as useful as the banks and institutions that can hold it, and regulation makes that easier. Bullish, which operates a crypto exchange, benefits from the same listing and custody logic. Recent sessions have also seen Bitcoin rise around 2% and Ethereum gain roughly 8% amid the optimism. Analysts argue this is broader than a Bitcoin story. The bill exists largely to give altcoins a workable path to compliance, so Ethereum and token platforms are seeing more direct upside than some Bitcoin-only viewers might expect. This is not simply bullish news. It is a repricing of legal risk. For years, crypto stocks traded at a discount because every new token listing carried the threat of an SEC enforcement action. If the Clarity Act creates a predictable process, that threat falls, and analysts have to raise their long-term earnings assumptions. That is why shares can jump even before the bill passes. There is also a second-order effect. Banks, payment companies, and institutional investors have been sitting out large parts of the digital asset market because they could not operate under ambiguous rules. Clear rules would allow them to enter. That is why Circle, as a stablecoin issuer, may be more sensitive to this legislation than a pure Bitcoin mining stock. The market is pricing in more competition, but also a much larger total market. However, there are reasons to keep your feet on the ground. The Clarity Act has not passed. There are active concerns that the bill could inadvertently stifle innovation or create a de facto ban on certain assets. Some commentators point out that a yield ban in the current framework protects banks, and that the strategic Bitcoin reserve holds coins seized from criminals rather than coins purchased with Treasury money. That matters because some of the excitement online assumes the bill does far more than its actual text. Prediction market odds at 90% can collapse quickly if a committee vote slips or a single senator objects. Today's share move is real, but it is based on a future event that is not yet locked in. The near-term outlook depends on process, not just sentiment. The next catalysts are Paul Atkins' actual SEC rules, any formal committee vote in Congress, and whether the bill moves through the Senate. Watch whether Coinbase and Circle hold their gains over the next few sessions. Watch whether Ethereum can stay above its recent move. If the bill stalls, the same names that led today's rally will likely lead the pullback. If it passes, the repricing could spread beyond exchanges into banking and payments. The sensible way to play this is not to bet on a date, but to track the language of the bill itself. The market is pricing a smooth path, and smooth paths in Washington are rare. So here is the clear takeaway for today, Wednesday the 19th of August, 2026. Coinbase, Circle, and Bullish are jumping because investors are buying a future where digital assets have a clear legal home. That is powerful, because regulatory clarity can be worth more than any single ETF or custody deal. It changes the rules for an entire asset class. But the bill has not passed, and the gap between high odds and signed law is where mistakes get made. Do not confuse optimism with enactment. Watch the text, the votes, and the SEC, because those will decide whether today's rally becomes a lasting trend or just another Washington-driven spike. If you want daily analysis on crypto regulation and stock moves, subscribe and turn on notifications.